And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely low.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. There it is. Welcome to the market forecast. Of course, the last day of the year, last forecast of the year. I'm going to have a gremlin or two. Good morning, everyone. It's Thursday, December the 16th. I'm John. Thank you, as always, for trusting me with your time. Interesting markets yesterday has set us up for some interesting markets this morning. As always, we're looking for context, risk management, and good patience. If you're in the markets already, hopefully you've got things going your way. Lots of data coming out yet this morning, as well as already this morning. At 7:30, the housing starts and permits came out. Both of those were higher. Probably more importantly, the jobless claims came out. Initial jobless claims, they were looking for just 200,000, 6,000 more. 206,000 initial jobless claims. Continuing jobless claims came out considerably lower than expected. They were looking for 1,936,000. It came out 1,845,000. The Philly Fed, they were looking for 30, came out 15.4. So a pretty big miss on Philly Fed. We're still waiting for industrial production at 8:15 Central Time. 8:45, the PMI composite flash is due out, and 9:30 for you nat gas traders, the nat gas EIA inventory numbers due out. The Bank of England raised rates to combat inflation, a surprise move this morning. It's their first rate raise since the beginning of the pandemic. U.S. stocks are set to continue yesterday's rally after the Fed showed some confidence in the economy and evidence in yesterday's FOMC notes. Oil prices recover after the EIA inventories showed a substantial drop in inventories yesterday, 4.5 million barrel draw. And that's about all I'm looking at here. I'm just going to be trading what I see. If I trade today, it's the last day of the year for me. I've got some considerable research and some improvements to go through over the next couple of weeks. As always, make sure you hit that lucky like button. Comment, share, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel as you get notification when we do go live. A brief look at the VIX. Of course, it's down this morning, about 3.5% at 18.59. Dollar index down slightly, 95.94, and the 10-year yield pretty much right where it was yesterday at this time, 1.47. So, as always, I got to say good morning to everyone. Charles, good morning and happy holidays. Merry Christmas to you as well. Robert, good morning. Zerain, Jim, Isaac, Jimmy Decker, Kevin Guy, Shaw Cunningham, Michael Knight, Terry King, Chris, good to see you. Good morning. Yes, last forecast of the year. I got to apologize about the recap yesterday. I was supposed to do that, and before I knew it, it was like 3:20, and I had blown my opportunity to present the recap yesterday, so I do apologize. Bill, good morning. Nico, Brian, Mirik, Norman, Drew, good morning. Dead letter opener. Al-Haji, good morning from Belgium. Wow. I might have a couple of Stellas over the next couple of weeks from Belgium. Bill, good morning. Yes, Santa exists. Frederico, yep. Andre is Good morning. All best wishes for a great Christmas and holiday season to all, Robert. After today's, see you next year. Best to all of you, Frederico, Manuel, Wen, Jeff, Jimmy. Love the hat. Oh, good. Yeah, it's that time of year, isn't it? We got Lacey running around here. My little reindeer is chasing dogs out in front here. Good morning, Lacey. There you go. And Trading Elite. Good to see everybody this morning. So, mentioning I got a lot of work to do, just going to show you this. This is the research that I'm going to be doing over the next couple of weeks and probably looking at ways to improve the market forecast and ways that I can be better for you and a better trader and better person myself. I got all this stuff here. This is all my notes from the forecasts and trading for the year, all right here. It's in numerical order by date. I'm going to start at the beginning and end at the end. I don't know if I'll get through each and every day, but I'm going to kind of random pick days and review what I was looking at, review what's on the charts, and see what else we can figure out here. I think we should probably just go to the charts here. We get a little bit of time, so let's start with the E-mini S&Ps. No echo. And we've got things happening here. New contract high in the March contract in the S&Ps happened in the overnight. We know that markets don't like to leave that there. We're going to be competing for that new all-time high in the regular trading hour session today. Yesterday's FOMC gave renewed confidence in the upside in these markets. You'd see that we're holding above weekly kickoff high, which is 4709 in the S&Ps. Not quite there in the Nasdaq yet, but we're working on it. And again, a new all-time high in extended trading hours. Are we going to accept higher pricing or are we not? We've got a late spike. Also, lost 30,000 in open interest. Now that's rollover related. Tomorrow is quadruple witching day. So we're going to have all the equities, futures, all the options, monthly options, and weekly options, all expiring at the same time tomorrow. That's quadruple witching. We'll probably see between 400 and 500,000 in the S&Ps expire and settle in cash. So we're going to start to probably see more dependable information in the next 2.5 months because we won't be in rollover. Here's the 30-minute chart. Okay, here's the numbers. The number came out, or the announcement came out. We had a little knee jerk. The market found its way higher. Looking at the base of the late spike as being all the way down here at 46.53. We've got considerable longs in this market in the overnight. And you can see that those overnight longs are starting to get a little bit nervous. We're looking forward to having the opportunity to see if we can close the gap. If we can't close the gap, we're going to be looking for opportunities to buy weakness to see this market continue to the upside. There's a whole number of opportunities for us to look for longs. We've got the gap close. We've got weekly kickoff high. We've got settlement. We've got the base of the late spike. It's going to be a difficult day to pick the right one if indeed that is what is going to happen. Remember, we've got this late spike that happened at the end of the day. The market has not had the opportunity in regular trading hours to accept these prices. I'm going to, again, be very interested to see how this market responds around this 4709 weekly kickoff high, see if we cannot close the gap. That would be a good thing for us if we're looking for longs to be able to limit risk in and around the high from yesterday and the weekly kickoff high. So we're looking at gap rules here, and we're going to have to trade what we see. Again, it's going to be challenging because there are so many different levels to look for opportunity. We talk a lot about we talk a lot about trying to get your best trade location first, and then letting some sort of structure form in the day time frame and looking for opportunities as that structure begins to form. Our best trade location probably would be the cheapest trade location would be the base of the late spike if we can get there. What about taking the move back down there? Is that something we want to do? The market is holding for now above an important inflection level, and I'm looking at this as a support level. Let's take a look at the Nasdaq, and then we'll watch the open in crude oil, which you should be in the February contract. All right, let's take a look at the Nasdaq. Here's the daily. We did take a look at weekly kickoff high in the extended trading hours. Of course, we do not have a new all-time high in the March contract here. We've found a little bit of resistance at last week's high / the weekly kickoff high, which is 16,420. We got pretty good, pretty deep beyond that. So I'm going to be looking for more opportunity there. It's looking more and more like our good trade location would be at the top of the late spike. The base of the late spike again is going to be pretty far away. We lost 7,000 in open interest yesterday, a function of rollover. Are we going to get above weekly kickoff high and accept the way it appears that we are doing in the S&Ps? So far, it doesn't look that way. Take a look now at the 30-minute chart. And so we've got a late spike. Base of the late spike is all the way down here, right around 16,040. We've got some overnight longs here already getting nervous. Finding some resistance at last week's high / weekly kickoff high. So we're just going to be a test for us today to be patient and see if we can get our best trade location first. If we can't use some of the structure that begins to form throughout the day session today to look for opportunities. Again, there's a lot of areas here where we could look for executions to the long side. We've got, what about if we leave the opening range at the low of the session? That would be an easy one. Probably not going to make it that easy for us. What about, near a gap close or a gap close? How about settlement? What about the overnight low? What about this little high volume node on the way up yesterday? What about the base of the late spike? By the time we get down there, we could have several losses. So again, it's it's trading when we see it. It's trying to get that best trade location first, and if we can't get it, use daytime frame structure with which to look for your opportunities. All right. Any other notes for the Nasdaq? No, not really. Let's take a look at crude oil, and we'll watch the open. Here's the Feb contract, February crude we should be trading. It's a 20-cent discount from January to February. I've adjusted my levels here accordingly. I don't know if it's going to make that much of a difference. The rollover range maintains. It continues here. We lost 27,000 in open interest. Okay, well, that's all right. That's just rollover related. Remember, we switched from Jan to Feb today. Even in this range-bound activity, we can just see it here. We're putting in lower highs and lower lows. There is a downward hit to this, and if we can take out the upper extreme of this, the next test, of course, would be weekly kickoff high and then points higher. We accept above weekly kickoff high. It would be quite a move for us today, but there's plenty of space above for continuation. Take a look at the 30-minute chart. We also basically had a late spike yesterday. I'm calling the base of the late spike down here around 70.50. And we do have some overnight longs. We are opening out of range and out of balance, which means the opening range trade may have a higher probability of success. So we've opened with a gap. If we can't close the gap relatively early, we look for opportunities in the direction of the gap. Here's a huge opening range. Oh my goodness. 36 ticks. We just took out the high of it. If this remains the low, there is good potential for a test of that weekly kickoff high, which is 74.80. And then if we get through that, there is, plenty of space above. But this is a large opening range. It's going to be somewhat difficult to take this because of the size of the risk on this. We can wait and see if maybe the market comes back and gives us a better trade location within the opening range, but we may miss this if that's the case. And it's one of the things we're always afraid of is, are we going to miss the move? Are we going to miss the move? Well, I'm okay with missing the move. I'd rather miss the move than get long here, get stopped out here, and then miss the real move. So, but right now, the opening range is the low of the session for crude oil. I'm not looking necessarily to take it. I'd rather take it on a pullback inside the opening range to limit my risk to see if we can get this continuation going. We may not have that opportunity. All right. Let's move on to gold now. We had a pretty deep auction down below that weekly kickoff low that was pretty swiftly rejected. This knee jerk to the downside occurred after the FOMC meeting. Now we see that the market has completely recovered back above weekly kickoff high. Open interest continues to build. We added another 2,200 in open interest yesterday. So since about the beginning of last week, when open interest was largely moot, we've started to increase the amount of interest or the amount of contracts that people are trading in gold, which is going to build energy and make something happen here sometime in the future. We're back inside range. We're back inside short time frame control. We also have a late spike here in gold that occurred after the regular trading hour close. So the settlement price is actually below that weekly kickoff level of 1770. 1764.50 is settlement, but it was, and this market basically closes at 12:30. It's the 1 o'clock bar that decided, okay, we're done down here. Let's get this thing moving. And I'm counting this as a late spike to the upside. So the base of it's going to be the previous high for the session, which is approximately 1773.90. The market has some considerable longs, and those longs are continuing to get paid. Currently, the opening range is the high of the regular trading hour session. That's 1790.50. That's this red hash mark right here. Doesn't look, though, like we're going to be holding that level here for very long, does it? We may not. I'd just like to make sure and point out that so far, the opening range is the high of the session. Did not get much of a pullback off of that, and we're still testing it now. The market looks like it may have some new business to the upside coming in and maintaining higher pricing for the short time frame, weaker hands longs that are in this market. So that 1790.50 is going to be somewhat pivotal. If we take it out, next stop would be our overnight high, which is 1790.90, 4 ticks above the high of that opening range. So far, we've been able to maintain that as the high of it. Let's take a look at the euro now. It's kind of funny. Yesterday was all about interest rates and money supply and all that, and the treasuries are the quietest market, or at least the 10-year was when I was looking at it this morning. But now looking at the euro, still somewhat range bound. We've been looking at the fact that we had a bull flag brought forth a decent upside move. Were we looking at this as another bear flag? We've got that same upside move that has just occurred in the overnight session and into the regular trading hour session. Yesterday, we tested weekly kickoff low. We're looking at last week's high now. The December contract expired. We lost 82,000 of them settled in cash. In March, we added 2,200 in open interest on the move away from the weekly kickoff low. And I'm viewing that as a pretty good positive. Well, we're already late to the party if we're going to be breaking out of this, kind of right next to each other bull flag. Now we're looking at testing the high of the range bound range rules say we fade the extremes of the range until proven wrong. If we break out of it, we go with any breakouts. Take a look at the 30-minute chart here. So we had some overnight longs. Overnight longs found new buyers coming into the open here this morning. Another, late spike-ish. Not necessarily a true late spike, but the market has been holding above range from yesterday and continuing. So all these overnight longs are continuing to get paid. As long as the buyers continue to come in on this, they're going to be looking for continuation. I'm very interested to see what the cumulative delta looks like here first thing this morning. So with the cumulative delta moving opposite direction, this leads me to believe that this is longer time frame buyers placing bids and just letting short time frame traders hit those bids because we're seeing decreasing delta becoming more increasingly negative before the open here and into and after the open. Sellers are the aggressors here, yet price is going in the wrong direction. There's a snake in the woodpile here, ladies and gentlemen. It's I'll be watching to see if we can get a decent pullback, see if I can find where the longer time frame buyers are placing those bids and replenishing them, because that's what this looks like. This delta divergence against direction looks like possibly longer, stronger buyers. It might be a cinch for us to go up and test weekly kickoff high if indeed that is the case. All right, and let's take a look now at the 10-year. Here it is. No real major changes, still range bound, still short time frame controlled, little change in value. We lost 2,600 in open interest yesterday. Big whoop. Here's the 30. Settlements here. We did end up with some overnight longs that have seemed to have reconciled. As long as we were inside value, I was looking at trying to stay patient, but we see this market pushing to the upside. Aren't rates going to be going higher? Doesn't that mean the prices of treasury should be getting some pressure? So the market not necessarily thinking that's going to happen anytime very, very soon, although the FOMC says we're moving those ideas closer to fruition, if you will. 10 years not necessarily buying that. Nat gas, here's the daily. Still range bound. Still range bound. We added 4,400 in open interest yesterday. Next Thursday is switch day for natural gas. A week from today, we're officially in rollover, and this range may be kind of created. the range bound activity. We added 4,400. Let's take a look at the 30-minute chart. This market was really fascinating beginning of the week with the opportunity that we saw to create an island low, which was, of course, foiled, as we all know. Now we're just kind of range bound. We got overnight longs here coming off, bringing price back into value, back into the point of control. Are we still holding some longs here? Are we going to see some buying coming in to continue this move to perhaps another test of weekly kickoff high? All of that is pending, of course, due to the nat gas inventories, which are due out at 9:30 Central, as we discussed at the beginning of the forecast. So you're going to try and stay patient, see what information comes from the EIA as far as stocks of the natural gas, and we'll see where we go from there. All right. So I am looking forward to a nice rest and some reading and some research and to a nice holiday. Hopefully, you're going to be doing the same. Looking forward to taking the this couple of weeks again doing my research. You saw the stack of stuff I'm going to be looking through and going through journals and kind of reviewing the charts and keeping the charts up and preparing for next year. Next year, the first forecast will be on January the 3rd, Monday, January the 3rd, right after the New Year's festivities. And we'll be having group coaching that day. Everything kind of goes back to normal. Always thinking about ways to improve our forecast and recap. Any ideas of that? Any ideas for that? Of course, we're always interested in feedback and, of course, heckling. Looking forward to, again, a peaceful Christmas, a peaceful holiday, a peaceful New Year. Be good to each other, be kind to each other. And there's no guarantees for tomorrow. Be a good person today. And I'm going to miss you all. I truly enjoy presenting this forecast, and I like to think that I make a difference for a lot of folks in doing this, and it's very important to me that I put forth good solid information, and Lacey says happy holidays and Merry Christmas, and so I'm going to take my deep breath. Stay humble, grateful, creative, and thankful, of course. I think we are very lucky to do what we do, and to have the opportunities to benefit from these markets. Not everybody has that, and come on, Lise, come here, girl. Here's my reindeer. I Lacey. You're gonna get that lick in, aren't you? You're gonna get it in. Okay. All right. Okay, Lace. Lacey's very excited about the holidays, as you can see, and I'll be thinking about you. Take it easy. Take some time off. Have a like I said, a peaceful holiday season. Merry Christmas and peace on earth. Pray for all of us, and I will see you in January. No recap today. That's done also for the year, and looking forward to another great year next year. So, blessings to all of you. Merry Christmas, Happy New Year, Happy Holidays, and I'll look forward to seeing you in January. Get out there and profit now. Trade well. See you soon.